Hello aspirants and welcome again to Legacy IAS Academy. In this video, we will be discussing as to what all took place in the Indian economy in the year 2025. So as the year comes to a closure, we'll understand as to how was the year 2025 with respect to the economic perspective. As you can see from this picture, there has been a lot of things that has happened in the Indian economy. Some that has been deliberately done by the RBI, for example, and some which were the repercussions of the globalized world. So we'll understand what are those important things. For example, the introduction of GST 2.0 or the changes in the income tax slab. Or, for example, the repo rate cuts from the RBI, which were so frequent, the growth rate of the GDP, the inflation in the Indian economy, this and much more is what we are going to see in this video. So let's get started with respect to the economic perspective. So the very first thing that we take up is the repo rate cut by RBI. Yes, exactly. So what has been happening is basically nothing has been happening before a year, you can see, right? So this is the graph which represents the repo rates. So we can see the repo rate was around 6.5%. It was not around, in fact, exactly 6.5% is what the repo rate was. And this is the time wherein the Monetary Policy Committee kept on meeting. But you can see the repo rate was left unchanged. It did not change at all for quarters after quarters after quarters. But the year 2025 was a year when the repo rate kept on changing. Kept on changing means was being changed by the RBI successively. As you can see over here, it was the first decline by 0.25%. So from 6.5, it went down to 6.25%. In the next Monetary Policy Committee meeting, they reduced it further by 0.25% and it became 6%. In the subsequent meeting, it was then reduced by 0.5% to 5.5%. And presently, very recently, when the recent meeting took place in the beginning of December 2025, RBI has further reduced it to 5.25%. So this has been for over a 1 year. That means in this year 2025 as well, there has been a decline in the repo rate. Now the question is, we have understood that the repo rate has declined. Now let us understand as to why this decline took place, or why did Monetary Policy Committee reduced the repo rate. Now India was dealing with a situation wherein our GDP growth rate was getting down or was decreasing, not by much, by very slight amount, by 0.1, 0.2%, but we did not want that to happen. Our growth rate was hovering around 6.4%. Our growth rate was hovering about 6.4%. This was our GDP growth rate. Now we want to achieve double-digit growth, so we wanted to increase the growth rate. Now, to increase the growth rate, it is important for the RBI to lower the repo rates. As a result of which, to get higher growth rate, the RBI has reduced the repo rate. But the question is, how is the repo rate related to the growth rate? So first, we need to understand what is this repo rate. This repo rate is the rate at which the RBI gives short-term money to the scheduled commercial bank. Now, if this rate is high, that means the banks will be reluctant to borrow money from the RBI. So they will have less money with them to give out as loans to us. As a result of which, the RBI decided to lower this repo rate so that the rate at which the scheduled commercial banks can borrow money from the RBI reduces, so that more and more such banks borrow money from the RBI so that they have more money to give it to us when we take more money from the banks. Also remember, this reduction in repo rate is also going to reduce the interest rates in the economy. So the interest rates of loan will come down and we will start taking more and more loans. That means more money in our hands. That means more demand. More demand means supply side will try to increase the production, and more production means higher GDP growth rate. So this was the reasoning behind why the RBI or the Monetary Policy Committee kept on successively increasing successively decreasing the repo rate. So we have seen that presently now it is at 5.25%. So if any one of you would have had a floating interest rate of a loan, if your interest rate would have been, let's say, 9% at this point of time, right now it would decline by 1.25%. It would be somewhere around 7.75%. You can please check that. If the bank is not providing you a reduced rate, even if your interest rate was floating, then you need to raise a voice over there. So this is one thing that happened. Now the next thing, did we achieve in our objective? Did the lowering of the repo rate by the RBI help India's GDP? Probably yes. As per the present estimates, we can say that yes, that is what has happened and is happening. How can we say that? Because India's GDP growth has actually hit a 6-quarter high in second quarter of the financial year 25-26. Now, the first quarter is from April, May, June. The second starts from July, August, September. So, the second quarter, that is Q2 of financial year 26, has seen a record high increase in the GDP growth rate. A 6-quarter high is what we have seen over here. So, what it has come out to be? So, this is Q2 of 2026, which shows us 8.2% of growth rate. Before that, you can see it was lesser, even lesser. So it has been the highest as compared to the last 6 quarters. So probably the reduction in the repo rate is helping India's cause over here. But of course, that will not be the only factor, but that will be one of the factors as to why we are seeing an increased growth rate in India's GDP. However, we also need to take it with a pinch of salt, because recently there have been reports by IMF which says that India's data is inadequate and is not enough. So it has not given a very high rating. It has given a rating of 6 for India's data. It is saying that when India is calculating GDP, it is, of course, it is calculating with production method and the income method. Production method is the value added method, as well as the income method. These two methods are yielding different GDPs to India. And that's possible, not a problem. But the issue is the difference is huge. That can also not necessarily be a problem if you have a reasoning for it. But what is happening here, there is no proper reasoning also as to why this differentiation is coming. So that is actually a problem. However, we will trust the government's data and claim that 8.2% is the growth rate. If we sustain this, or at least try to hover round about that, our GDP should be growing by a number higher than what we had estimated previously. Right. Next, a very interesting point about inflation. Inflation was also a very hot topic in 2024-25. Now also it is, but for the other reason. Right. So why was inflation a hot topic? See, inflation, if you look at the last 2-3 years, was at an all-time high. It was going very high. Now, inflation was high at one end and the growth was less. Now, to address inflation, the RBI tends to increase the repo rate. But we have seen RBI has here reduced the repo rate. Why did RBI not increase the repo rate? See, because if there is high inflation in the economy, that means if it's a demand mismatch, or let's say a demand pull inflation, that means the demand is high, the supply is less. Right? Demand high means more money chasing less number of goods. So here you should increase the interest rate, so the loan are at a higher interest rate, so that money gets costlier for the people, so less money in the hands of the people, so that the demand comes down. But the RBI did not care much about this. There is a reasoning for that. It's not an allegation or a criticism, but there is a reasoning for that, and we need to applaud the Monetary Policy Committee for understanding that reasoning. I'll tell you what that reasoning is. So here you would have increased the repo rate in order to lower the inflation, right? But if you increase the repo rate, your growth is going to take a hit, as we saw. So for growth to increase, you have to lower the repo rate. So RBI was in a dilemma, so as to increase the repo rate or decrease the repo rate. So RBI went ahead and reduced the repo rate in order to increase the growth. But then what will happen to the inflation? RBI estimated that this inflation that is there, what is inflation? Inflation is the general level of the general rise in the price level for a sustained period of time in a basket of goods and services. Now, this inflation, RBI said, is basically an increase in the headline inflation. Headline inflation. Now, the headline inflation consists of food and energy also. Whereas, if you look at the core inflation RBI said is not that high comparatively. Core inflation is the inflation which excludes food and energy, right? So this is core inflation. RBI said core inflation is not that high, headline inflation is high. And why is headline inflation is high? Our economic survey 25 explains it. Headline inflation is high because food inflation is high, and food inflation is high because tomatoes, onions and certain other vegetables have decreased in their production, as a result of which their prices have gone up. Now, why did their production come down? Because of the El Nino effect, because of the extreme climatic conditions, because there were 74 and 73 heat waves in the year 23 and 24 respectively, as a result of which the production has gone down. And now, geographically speaking, El Nino was to subside, La Nina was to come in, and the heat waves were to be declined. So what will happen? The production will grow again. The production will increase again. When the production will increase again, the supply will be more, demand less, so the inflation is going to come down and going to take care of on its own. As a result of which, RBI decided that I need not intervene and do much about it. It is going to take care on its own in the year 2025, and take care it did. Yes, absolutely right. RBI was bang on over here, took the right decision, and as you can see, what has happened to inflation? Inflation has actually declined. In fact, inflation is right now, as we speak, is at an all-time low. So if you have a look at it, now this is our retail inflation. Retail inflation basically consumer price index, CPI. So if you look at October 2024, where is inflation? It's at 6.2. But look at in around mid of 2025, it has come down to 3.3. Now it is less than 1%. So now we need to ensure that slight amount of inflation remain, because growth is usually accompanied by inflation. We do not want to go on to negative inflation situation. But one thing is clear, inflation has now been in control. As you can see, it is now at an all-time low. So a really amazing decision by the Monetary Policy Committee, and a really good analysis which is present in your economic survey 2025, which I have just told you, right? So these things have happened. The RBI has the concept of inflation targeting. It has to maintain the inflation. Of course, it has gone down beyond below the lower level, but yes, it is going to correct itself a bit now. So what has happened is, if you look at our GDP, the GDP is rising. The July-September of last financial year, the GDP growth rate was 5.6 only. This is the Q2 of 24-25. The Q2 of 25-26, the GDP growth rate is how much? It is 8.2%. So considerably higher growth rate in our GDP is seen. On the other hand, if you look at inflation based on CPI, that is consumer price index. Now there are various consumer price index. For example, you have consumer price index for agricultural laborer, industrial worker, right, rural laborer. So which CPI is this? This CPI is CPI combined. Combined means rural plus urban. This is the combined CPI. So this measures the increase in the prices, or the changes in the prices would be the better way to say it. So if you look at this CPI in percentage, it has been consistently going down. So in August 25, it was 2.07, then 1.44, then now it is 0.25. So less than 1. So on one hand, the GDP is growing, on the other hand the inflation is down. So it is a proper, you can say it's like a Goldilocks economy. Goldilocks economy. Goldilocks economy is that economy in which everything is just about right. The growth rate is also about right and the inflation is also about right. So that about right situation or condition of an economy is called as the Goldilocks economy. So that kind of a situation is existing over here. However, this may correct itself and may hover around somewhere 2-3% in the coming quarters. RBI is anyhow having an inflation targeting of 2 to 6%. Basically, it is 4 plus minus 2%, which comes out to be 2 to 6%. Right now, so till here everything hunky-dory, everything is good. But of course, there are certain hiccups also in the economy which we have also seen. One of them is the decline of the Indian rupee. Yes, an Indian rupee has declined considerably. So if you look at it, when the start of the year took place, the Indian rupee was at around 85.56. In fact, if you go back into November 2024, you will realize it was 84 point something, even less than 84, right? But it then depreciated and we crossed the 90 rupee mark. Right now, today's exchange rate is trading at around 89 rupees 95 paise or something, but we have breached the 90 rupee mark in December 2025 itself. So approximately 5 rupees worth of depreciation is what the Indian rupee has seen against the dollars. Now, very interestingly, it's not just the dollar against which the Indian currency is depreciating. Indian currency is also depreciating with respect to pounds, with respect to euros, with respect to yen as well. Now, what are these currencies? These are international currencies. What is an international currency? The currency that is in demand throughout the world, is demanded by various countries for export, import, for trade basically. That's an international currency. Indian rupees so far is not yet internationalized. But these currencies, you have dollar, you have pound, you have euro, you have yen, even Chinese renminbi is there. But the understanding is that against all these 4 international currencies, Indian rupee has depreciated. Now, what is depreciation? See, there is a concept of exchange rate. What is an exchange rate? The rate at which one currency can be exchanged to another currency. Right? This is an exchange rate. So whenever, so let's say dollar and rupees, $1, let's say was 85 rupees. Now this $1, when it becomes 90 rupees, then we can say that the value of the rupees has declined. Correct? The value of the rupees has declined. So this declining value of rupees against dollar is nothing but depreciation. Then what is devaluation? In devaluation also, if you look at devaluation also, in devaluation as well, there is a decline in the value of the rupees against the dollar. That is devaluation as well. Then what's the difference between depreciation and devaluation? In devaluation, what happens is, as I said, depreciation and devaluation both are what? Reduction in the value of Indian rupee against the dollar is the depreciation as well as devaluation of Indian rupees. But why are we calling it depreciation and not devaluation? Because devaluation is also reduction of Indian rupee against the dollar, but it is the reduction of Indian rupees against dollar when it is done deliberately. When it is done deliberately by the government or the central bank. And in depreciation, this is also the reduction of Indian rupees against the dollar, but this is due to the market forces of demand and supply of these currencies. Right? So is the Indian government or the Central Bank of India, that is RBI, reducing the value of Indian rupees? Absolutely not. So it is not devaluation, it is depreciation, because this decline in the value of Indian rupees is happening on its own due to the market forces. I hope that's clear. That's the difference between the two. So this is what is happening. Now, is depreciation of the rupee a completely bad thing? No, absolutely not. It's not completely bad. There are certain good aspects as well. But for a country like India, there are certain issues, right? I'll explain that. And also, there should not be such a huge depreciation at such a short period of time. So depreciating by 5 rupees worth in a period of 1 year is a high degree of depreciation which we don't want as such. Now, I'm saying that there can be certain benefits also due to the decline in rupee. Now, how is that possible? Yes, that's possible. But we'll see, will India benefit or not? So, India as such may not benefit as such. Let us understand. So, imagine a situation wherein $1 was, let's say, it's an extreme example just to help you understand. $1 was, let's say, for ease of calculation, 50 rupees. But then the rupee depreciated and $1, for example, becomes 100 rupees. Now understand the situation. Now what happens? Let's say there is a country, USA. From USA, India is importing a commodity, right? Or before importing, let's talk about exports. So let's say India was exporting 1 pen. The cost of 1 pen was 50 rupees. The cost of 1 pen, for example, was 50 rupees. Now, when we export this 1 pen in this situation, then this 50 rupees pen will cost how much to the importing country? It will cost $1. But if our rupee depreciates and $1 is 100 rupees, and then again we export our pen, then to buy a pen worth 50 rupees, how much do they have to spend? Only $0.5, because now $1 is 100. So 50 rupees is how much? Only $0.5. So with the depreciation of the Indian rupee, our exports become cheap. When our exports will become cheap, the other countries would want to buy our exports. So it will increase the volume of our exports. I hope that's clear. So this can help our exports, which is a good thing. But remember, the volume will increase. Let's say instead of 1 pen which they were buying here, now they may want to buy 1.5 pens. So our volume of export is increased by 50%. But the value need not necessarily increase. Why? 1 pen into $1, $1. 1.5 pens into $0.5 is only $0.75. So even with the increase in the volume of the exports, the value need not necessarily increase. For the value also to increase, the volume of the export should increase by a percentage higher than the percentage decline in the value of the Indian currency. Remember that. So the idea is the exports can be benefited, but the imports get impacted. Let us see how the imports are going to get impacted. Now, imports will get impacted because let's say we were importing a particular product from another country. We were importing a country producing something worth $1. When we were importing it, if $1 is 50 rupees, we will be required to pay only 50 rupees for that. But if we import the same good at the exchange rate of $1 equals 100 rupees, then what happens? We'll have to give them 100 rupees to import that $1 worth of good. So our imports will become costly. Now a straightforward solution here can be what? If imports are becoming costly, do not have this import. Stop importing materials, goods and services from the other country. Yes, but it's not that easy. Why it's not that easy? See, first of all, imagine, no, iPhone prices are increasing. You are still wanting it, correct? But forget the iPhone. Even that may decline. If the prices go too high, people may not want to have it because it's not a basic necessity. However, there are certain imports that are compulsory imports, which we have to import no matter what. For example, the crude oil. We have to import no matter the price. Activated pharmaceutical ingredients which are used in medicines, we imported from China. We have to import no matter what, right? Rare earth minerals, we have to import no matter what. So these are the compulsory imports. Even if it is costly, we have to import. So that is going to ultimately increase the import bill of the nation, which is not a good thing as such. So when a country is a country with high compulsory imports, it is not going to help as such. I hope that's clear. So this is the entire analysis of the depreciating Indian rupee, and we have seen it has depreciated quite considerably. It is high time we try to strengthen it by, having improved exports to other countries, sending, being able to create capital assets which in future can generate revenue for us. We are having huge amount of export in IT services, but we are not creating anything in the field of IT with respect to patents in IT. but the foreign countries basically are having Google, Amazon, etc., which is yielding them revenue after revenue year after year. So we need to start doing that here as well. Now the next thing is the total foreign indirect investment or foreign institutional investment flows. Now this is also a concern. What is the concern? The concern is that the foreign institutional investment is flowing out of the country. The dollars, the foreign exchange that has been invested in India is going out of the country. Yes. So this is the graph that shows it. This is the FII outflow and inflow, the net of outflow and inflow. So it is in billions of dollars. Now you can see that the years, different years are given. So these years it's positive, very highly positive. That's a good sign. Some of the years it's negative as well. Right, negative as well. Now this is the depreciation of the rupee. So this is the depreciation of the rupee. So depreciation is anyhow going to be negative. Negative anyhow in the sense that it's not that theoretically it will always be negative, but practically that has been the case. But you can also see the depreciation of the rupee also is fluctuating. Here the depreciation is quite high. It's quite less over here, but again quite high and quite high. Now, if you look at the outflow of the outflow or the net flow is basically outflow minus inflow will give you a net flow. So this net flow, if you look at it, is this net flow here is positive, right? But if you look at over here, the net flow is negative. That means $17.9 billion is the net outflow from the nation. So if 50 is coming, 32.1 is going, 50 is coming, basically 67.9 is going out. So on an average, minus 17.9 is the net flow. And here minus 10.3 is the net flow. So here of course it's positive, here also it's positive, but there are considerable amounts of negative as well over here. Whereas throughout these years you will see majorly positive and very less amount of negative. But here you are seeing very less positive and huge amount of negative. So the indirect investment or the institutional investments that are there, it is generally flowing out of the country. Now why that is happening? Reduced trust is one reason. Second, when the let's say Federal Bank of USA or European Union Bank, etc., they increase their interest rate, so those places become more attractive for the investor to invest money rather than investing it in India. So we need to now start making our market quite attractive. It is attractive with respect to the robustness, the population, the demand, etc., but we need to also make it strengthening. We should also strengthen it with respect to the macroeconomic factors as well. Next, a very good thing that took place in 2025 is the implementation of GST 2.0. Now, it was being projected as something really amazing and something really positive, a lot of benefit. See, a lot of benefit is coming, but majority of it is nothing but a course correction of the previous implementation of GST. So there were a lot of issues in GST. This GST 2.0 actually corrects its course and basically rectifies its wrongs of the past. That is exactly what it does, which of course is going to get us the benefit which we should have got long back itself, but at least we are getting it now. For example, certain essential medicines, there were no tax on certain essential medicines under GST 2.0. But the question is what? Why were there taxes under the previous GST regime on the essential medicines? It should not have been, right? That is exactly the point over here. But it's a good step. What has happened is there are two prevalent rates now, 5% and 18%, right? These are the two generic prevalent rates. The 12% interest, the 12% tax rate has been done away with in GST 2.0. So majority of the things are now, see, some of the things are exempt from tax, 0%. Some of the things now are at 5%, the other are 18%. These are the two most prominent taxes. Now under GST, then what is this? This is the tax rate for the demerit or the luxury goods, luxury or the sin goods. Sin goods like you can talk about, let's say, online gaming, for example, is going to be taxed at now 40%. Luxurious SUVs, etc., are the luxury goods which are going to be taxed at 40%. Please, now this picture has this particular, let's say wine bottle and all that, but remember, alcohol as such, alcoholic beverages are not under GST. Alcoholic beverages are taxed even higher. If they are brought in under GST, their taxes will reduce and the government will lose a lot of revenue. So the government has not brought that in GST. Even petrol is not under GST, remember that. But this is a significant change that has taken place that is going to really help the consumers as well. Now, because the reduction in rate has taken place, so it is going to reduce the tax revenue collection of the government, but the government estimates 46,000 crore rupees of revenue worth of loss will take place, but in the coming years, the increased demand is going to offset the loss in the revenue by generating more revenue to the government of India. I hope that's clear. Next is new MSME classification criteria. So MSME has a classification criteria based on the current investment, based on the investment limit and the turnover limit. Now these two limits has been increased. So previously the micro enterprise having investment of 1 crore and turnover limit of 5 crore was a micro one. Now this investment limit has been increased to 2.5 crore, means there is a multiplication by 2.5. So now the new investment limit for micro enterprise is 2.5 crore and the turnover limit is 10 crore. So all these have been multiplied by 2.5. Here it has been multiplied by 2. So you can remember it like this. The previous investment limit has been multiplied by 2.5 and the previous turnover limit has been multiplied by 2 to give the new investment limit and turnover limit. So the new investment limit for small enterprise is 25 crore now and turnover is 100 crore, and the new limits for medium enterprise is 125 crore of investment and 500 crore of turnover. That means any company with an investment of 125 up to 125 crore and turnover up to 500 crore can be instated as a medium enterprise, and any with 25 crore investment, 100 crore turnover as a small enterprise, and any enterprise with 2.5 crore investment and 10 crore turnover as micro enterprise. I hope that's absolutely clear. Now let's move on to the next. So if you can see this, overall unemployment rate, very important number. Unemployment is also a very important thing. So India was seeing what we call it as a jobless growth scenario. Right? Jobless growth does not mean that the jobs are not there. It simply means that the jobs, the increase in the jobs is not proportionate to the increase in the GDP. The increase in job not proportionate to the increase in GDP. That was the situation. But now we have seen that this unemployment rate has slightly eased. Has it lowered considerably? Not to the desirable level, but it has eased out. And this is the data in front of you. So in April 2025, the unemployment rate was 5.1. Now this unemployment rate in November 2025 has gone down to 4.7. Remember, when we talk about this unemployment rate, this is the involuntary unemployment rate that we are talking about, not the voluntary. What is voluntary unemployment? When you are able to work, but you are not willing to work. You want to study for UPSC, for example. So that's a voluntary unemployment. That you will not be under the, let's say, figure over here. But when you are able to work, you are willing to work, you are searching for a job, but you still don't get a job. That is involuntary unemployment, and that is what this statistics is all about. It is about the involuntary unemployment, and the involuntary unemployment has lowered from 5.1% to 4.7%. So that is a good thing. However, if you look at the global side of it, not the unemployment, but this is a good thing. But if you look at certain things which are not happening that good, is the global tariff war that is starting or that is happening, wherein USA had imposed 50%, 25% tariff on India plus another 25% of tariff of India. 25% tariff and 25. Why 25 two times? 125 because India has a surplus against US. India exports more to US than imports from US. So USA did not like it. USA imposed 25% tariff on Indian goods. Plus India is also buying oil from Russia, and USA has imposed secondary sanctions on Russia. Means USA has said that if anyone buys or trades with Russia, they are going to be put under heavy tariffs. So we are trading with Russia, we are importing crude oil from Russia at a cheaper price. So USA put another 25% of tariff on India, which is not a good thing as such. So what did India do? Did India stop buying crude oil from Russia? Absolutely not. India follows a dehyphenation policy. That means what relationship we have with Russia has nothing to do with USA, and what relationship we have with USA has nothing to do with the relationship we have with Russia. And Russia anyhow is giving us cheap crude oil, as a result of which it is also economically or financially not advisable to stop importing the crude oil from Russia. So we have done that. In addition to this, even Mexico has imposed 50% of tariff on India. Basically, Mexico has imposed tariff on their non-free trade agreement partners. As a result of which, see, India is now looking for having more and more free trade agreements. Recently, one with New Zealand has been signed, which may be implemented in the coming months. And we are also under discussion with free trade agreement with respect to other countries as well, UK as well, Canada as well, and USA as well. So going forward, more and more free trade agreement can be beneficial, can sidestep the tariffs that are being imposed. However, with authoritarian regimes like USA, which left, right, center imposes tariffs without any rhyme or reason, India has to stand its ground, diversify its import sources and export sources as well, in order to ensure that these things do not impact. So what is the overall verdict? The overall verdict, it is again quite subjective, because certain things are good, certain things are not. But we can say that Indian economy has stood the test of time. However, there are certain improvements that we need to do. The growth rate is increasing. India is still the fastest growing major economy of the world. Inflation has come down, but the depreciation of the rupee needs to be controlled. Unemployment needs to increase further. We need to improve ourselves in the trade sector, wherein the deficit needs to be converted into surplus. We need to fight the tariff as well. So we need to brace ourselves with this new year which is coming in front of us, and hopefully our economy will continue to do better and better in the years to come. Thank you.